Enjoy your meeting. Just a reminder, today's meeting is being recorded.
Hey everybody, good afternoon. This is David Blake with Tuesday Tech Talk. And we've got a lot to go over today. We're going to review last week and maybe a little bit of yesterday's action. Then what we're going to do is we're going to talk about, we're going to take a look at the major averages. Then we're going to go into the website and talk about using the screening tools to find some trading ideas, to look at some stocks that haven't been in a rocket shot from Tuesday that you don't want to be chasing, but you can still find some good ideas for some long positions. We'll talk about 20-25 minutes, and then we'll open up to some questions. I did have some questions come in about the CTI, and we'll go over that also. Then we'll, so this should take about 30-35 minutes. But anyway, the stock market seems to be in kind of a little bit of a melt-up mode. Despite the mixed economic data, most companies are beating lower earnings estimates. And quite frankly, there just isn't anywhere else to put money. And that's what's kind of putting a bottom underneath the market. Apparently, Yellen doesn't want, the Fed's not going to raise interest rates anytime soon. So you can still pop off about 2.5% or so with in the S&P 500 on some dividend funds, maybe 4 or 5%. So what we're seeing right now is last week the NYSE Advanced Decline Line, which is a leading indicator market direction, made an all-time high. It made another one on Monday. We have seen some slight expansion on the NYSE new 52-week highs versus new lows. Interest rates still close to zero, with rate hikes off the table until possibly later in the year. The number one sector right now benefiting from that, along with a weak U.S. dollar, as industrial group, along with the materials and energy. We have central banks around the globe also pushing for negative rates. That's allowing emerging markets to keep rates low and actually even cut rates. I think Singapore and a few other emerging markets, which you usually don't get that very often, are actually cutting rates also. And we had a little bit of a oil scare over the weekend where the Saudis decided not to impose a production cap. We thought that would probably take oil prices down to about $35 or so. I think they got down to about 37 maybe, but they bought the dips, and that benefited the energy and materials sector. And it also was good for the financial sector because that is starting to eliminate some of the fears of bad loans to the oil companies. And so that helped the financial sector last week. It was up about 3.5%. It's been a lagging indicator. It's still a cheap sector at this point. So last week's market letter touched on most of those, and that's kind of why the market's going up at this point. That, along with corporate buybacks of their own stock. But right now, let's go ahead and take a look at a couple of the different markets. Also, want to show you where some of the resistance lines are. First of all, we have the Dow Jones. Of course, we finally broke this descending trend line that's been in place since last summer, and we're up here going a little bit of sideways action. On the downside, we had some negative divergence in the 14-day RSI, which means that while we're making new highs here, you're seeing a divergence in the 14-day RSI as just heading down. That's something you want to kind of keep an eye on. It shows that there's not a lot of real strength or a lot of oomph behind the market move here. Also have the MACD short-term kind of going sideways to slightly positive. We'll see what it does today. The market was up about 80 points earlier. We're up about 20 now. And so several of the other indexes are actually negative. But I also want to talk about something that we haven't talked too much about recently, and that's pivot points, which we don't presently have on the smart chart, but they will be coming up very soon. The pivot mark on a chart, in this case for the Dow Jones, it's 17,340, which is right around this area here. And what traders on the floor and institutional traders will look at, the pivot point is where they believe that the trend is actually changing. So it's going to take a pullback to about 17,340 if you want to keep track of these numbers before we actually see a trend change. But also on the pivot points, it gives you resistance and support numbers. And on the first resistance level, that we have right now is 18,134. That would be, if we can break through that, the second resistance level would be 18,584, and that's right about a new high. We got up to 18,103 this morning, so we were about 30 points below the next resistance level. So you want to kind of keep an eye on that to see if it's going to be able to break through that. Okay, here's the NYSE advanced decline line, and we made a new all-time high over here. And this is a leading indicator, so you're seeing accumulation, especially in the large cap stocks, to pay big dividends, because if you're a little bit worried about the market in here, that you can at least buy something that probably has a floor under it for at least temporarily, and maybe pick yourself up 4, 5, 6% in dividends. So this is a strong indication that the market still can move higher. All right, here's the S&P 500. Yesterday took us right up to its descending trend line. Again, we have negative divergence. Is this moving higher? 14-day RSI indicator is moving a little bit lower. MACD again is a little bit overstretched and also moving flat. All right, the pivot points on the S&P 500. The pivot point is 2023, which is right about here. And so that's where you want to see if any kind of a pullback. If it breaks below that, that would probably spell trouble for it, and would mean a sell-off would pick up. The first resistance is 2108.94, which is right around here. You're just right above the trend line, and we got today to 2104. So there is something in these numbers you want to watch. That if we can break above 2108.94, the next resistance would be 2158, which would be up in here, up around the old highs. So keep an eye on that. Again, we're seeing good accumulation. You're also starting to see where this 50-day moving average could come up here and golden cross for the S&P 500. You want to watch, see if that adds up or not. Okay, now here's the NASDAQ advanced decline line. As you can see, it's a laggard behind the NYSE. If this thing's going to break out the new highs, you would like to see this thing break up. If this thing would roll over and come back down below this area here, it might mean the market could be starting to turn. So that's on the Market Edge homepage under Market at a Glance. You can follow that daily. Okay, here's the, hold on a second here. Okay, then hit the NASDAQ over here. Somehow bypass that. All right, NASDAQ, it's still lagging the senior index. It hasn't quite gotten up to the descending trend line yet. AD lines also lagging, as we just saw. RSI again showing divergence, and the MACD is also negative. Now for the NASDAQ, the pivot area is 4783. Okay, so if we can see this thing come back down here, right around to where the 100-day moving average, that's going to be the turning point on this, where the intermediate term would switch to negative. Positive resistance up here. First resistance is going to be 49.85. We got to 49.68 today. So again, like all these indexes seem to have gotten about 10, 15 points of where the first target would be. The second resistance, if we can break through that 49.85 area, would be 5100, which would be up here, which is about where we got in the fall. So those are some areas to watch. The first support, if we break that pivot point on the NASDAQ, would be 46.68. Would be the downside target. And by the way, the downside targets for the S&P and Dow Jones, for the Dow Jones, it's 16,890, and for the S&P 500, it's 1973 at this stage. Okay, here's the Russell 2000. Again, this is breaking out to new highs, and it actually just finally crossed above the 200-day moving average. It was one of the last indexes to do so. But we have the negative divergence in the 14-day RSI, and also again on the MACD. The pivot point for the Russell 2000 is 1089, which would be this area of consolidation where we were at about a week and a half ago, when it looked like it was going to kind of stall out. Okay, resistance now comes into play at 1142, and this morning we hit 1146. So the Russell 2000 actually made that first resistance level, but it's backed off now. In fact, I think the index is negative as at this point right now. Support on the downside, if we break that pivot of 1089, it's going to come in at 1060, which is right down here, about where the 50-day moving average is. Last one we want to look at before we go and look at some screening tools is the transportation index. It's up about 20% off of this January 20 low, so it's been an outperformer. We kind of want to watch this thing to see if we can take out these highs to maybe get a little bit of a Dow theory buy signal. But it's in the process right now of trying to break above this descending trend line. Again, negative divergence on the RSI and a flat to slightly positive MACD. The pivot point on this is 78.08, right about where the 50-day moving average is. So if we take out from about a week and a half, we can take that back out. That would indicate the trend has changed. Resistance on this, first resistance is 82.49, which would be right about here, which is close to where these lower highs are back in November, December. And support on the downside would be 75.03. That would target the 100-day moving average on the Dow Jones Transport. So those are some numbers you want to watch, especially if you go back and listen to this and write down the pivot point numbers. It might help you to see if a pullback is going to pick up a little bit. All right. So despite the not liking the market, we're a bearish stance on the thing. There still are places where you can find some trading ideas on the website. And first of all, what I don't want to find is I don't want to find the stocks that have had a straight rocket shot off the lows from February. So what we want to try to do is we want to find some ideas that are outperforming the market. We'll check that with the 50-day relative strength. We want stocks that are going to be rated long or early entry buys. They're breaking out of a previous resistance area. They're under accumulation. And it can also possibly give us a realistic target area for a trade. Okay. Now, I'm going to switch this thing over, but this is to get to this report output list where you can determine how to change some of the CAN lists that we have in Market Edge. You're going to go onto the site, and you're going to click up here where it says Help Manage Your Account. And at that point, you're going to see on this area over here, you're going to see something called Report Output. And when you come up with it, it's going to look like this. So let me shut this down real quick, and we're going to actually go live onto the site. If I can, yeah. And we'll actually build a couple of lists and show you how to do it. So bear with me while we get this screen share thing up. And let me know if when the charts come up, if you can't see this. I won't be able to see your questions until we actually go back off. Let's see. So I'm going to close this, Will. Is that right? Okay. Can you see the charts now? Okay. All right. Now what we're going to do is we're going to the Market Edge site. Like we said, we're going to hit on the Help Manage Account, and we'll go over here to the Report Output. And this comes up. All right. Now, what I want to try to do on this is the first thing you have to do when you're going to change this, and you can leave this in your Market Edge thing. First thing you want to do is name the output list. We'll call this Killer Trades. Just something to put in there. Type that in. Save that. Oh, okay. Well, I'm going to save some filters. Okay, what we're going to try to do is we're going to here. All right, we're going to take what we want to get out. In this case, first thing we want to get is the name of the stock, symbol, move it over. I want the company name, move that over. I want something that's under accumulation, so we'll take the up-down slope. Actually, I want to take the day close in there. Power rating, move that over. Up-down slope, move that over to make sure it's under accumulation. I want the 50-day relative strength. We'll move that over. And I also want 5-day % change. Reason being, I don't like to buy stocks that are up 10% or more. when I'm looking for a quick trade. Okay, so we're going to save this. There, you already have saved 10 report output. That's okay. Let me delete one over here. I figured this was going to happen. Okay, let's go in here. We'll try it again. So we'll take the symbol, company name, take the daily close, take the up-down slope, actually I'll put the MACD short term just to make sure it's not pulling back too much. Get the 50-day relative strength. We're going to take the 5-day percent change. And now we're going to call it Killer Trades and save it. Okay, that didn't work either. All right. Sorry about this. Okay, it's not going to. You can do it. I should have had this thing emptied beforehand. My bad. But what we're going to do is we're going to go to screening tools after we get that. And then what we'll do is we're going to click on Pick 6. And I already had this pre-screens is what I had had that thing before. Okay, so what we're going to do is I want stocks over $10. We're going to go down here. We're going to have the up-down ratio up. MACD, I want it bullish. I want stocks that are long or improving. In this case, what I'm trying to do here is try to find stocks that are going to break out of a resistance area. In this case, we're going to use the point and figure breakouts. Okay? Now, the point and figure chart is going to tell me several things. It's going to show me exactly where the breakout is occurring. It's going to show me where congestion areas are. It'll show me where the next resistance area is. It'll also show me whether or not the trend is rising. It'll also give me sell stops for my trade. Okay, so we came up with a list of stocks over here. What I want to do now with this list is I want the strongest stocks off of this list. Now we're going to eliminate 3 of them right off the bat that are up more than 10%. GEOS, we're close on that, but we'll take a look at it anyway. So now we'll come over here and look at GEOS. You can see on the second opinion, it had a point and figure double top breakout yesterday. All right. So now we'll take a look at the quick chart, make sure we're not in a rocket shot. This is a good candidate because you see it's had resistance levels over here around $14. So now we'll go over to the point and figure chart on this. And as you can see, it has some congestion over here. We broke out of here at the $15 range, and we're at $15.50 right now. A lot of times what you'll watch on this thing, you have a nice, your stop's probably going to be down somewhere down here around 12, or when this thing reverses the $3 range, that would be another area where you come out. But when this thing breaks out of this area 15, you should be able to get a run in this thing probably to about $18 over the short term. What you're doing is you're actually you're buying it. You're actually buying the breakout, and I'm going to show you here on another couple of charts is how you're going to get a target area off of this. So let's go ahead and close this one. And I had a couple of stocks here that I'd already pulled up earlier. Okay, on this list we have, all right, AGIO. And that, of course, this one's up 10 and 11%. Again, we'll take a look at that, look at the quick chart. Again, despite the fact that it's not a rocket shop, it did have a pretty good week, up 11%. But in this case, let's just, for time's sake, let's take a look at the point and figure chart. And that's not working either. Oh, here we go. Okay, that's better. All right. So over here now we saw this AGIO. It had a breakout over here at $51. When it traded above $51.50, that was the breakout price. So we hit 52 yesterday. With AGIO this morning, I took a look at this. After a little bit of reverse, we bought the buyout over here. But back in here, this is how you can target some of these trades. When the thing reverses over here, if you count the rows, in this case we have 1, 2, 3, 4, 5, 6, 7, 8 rows until we come into a breakout price. So when the stock breaks out, I can add 8 X's to where the breakout price. In this case, we go 1, 2, 3, 4, 5, and 6, 7, 8. Had a little bit of a pullback, and our price target on that would have been $49 if we had bought it down here at the 41, at the break of $41. Now, if we actually wanted to wait until we saw the breakout over here, we could have added 8 to this target, because we also went across the congestion of 8 here. We had 1, 2, 3, 4, 5, 6, 7, and 8. The next, on this case, the AGIO has the potential to probably hit $53 if you're trading off of this thing. That's pretty decent trades. You buy it in here at 46, your upside target would be 53. That's not a bad target area, and in this case, it hit the thing in less than a month. Let's see, boom, hit it, backed off, broke it again, and you'll see on here the AGIO, it actually could possibly get up here to around 56, 57, but in this case, where we hit the 53, that's probably good enough in a market like this. So let me pop this off again. Okay, I have another one over here. Here's CRS. This one's only up 1% or 5% over the last 5 days. We'll take a look at Carpenter Technology. Take a look at the quick chart. It's a bit of a rocket shot, but it does have some consolidation here, which is what I'm looking for. I want something where I can see where it could pull back, and downside might be a little bit more limited. So now we go to the point and figure chart. And again, this is a nice upward trend, a nice upward channel that you're looking at. It had the double top breakout over here at 37 yesterday. And another thing about point and figure charts, you can actually find head and shoulders. You can find pennants, flags, whatever you're looking for. The chart recognition is very strong still on the point and figure charts. So kind of like this thing here, we're in a nice upward channel. We broke the double top at 37. I want to find out next, maybe, let's see what this stock does. And they are in the specialty alloy operations, performance engineered products, distributes metals, specialty metals worldwide, iron and steel industry. Now, this is something else. If you're not looking at this, you may want to go. Before we look at the point and figure chart, run over to the advanced tools, find out all groups. Again, click on relative strength. What's the strongest and weakest? And we have steel over here. If you're looking for some quick trading ideas, it's great if you can buy the right industry group again, because if you buy the strongest stocks in the strongest sector, it just increases your chances of making money a little bit more. So, I know I'm going to miss that thing. Okay. So anyway, with CRS, it had the breakout yesterday at around 37. Today it hit 38.16. Most of these things, when they break out, they will give a little bit of a pop. So it's something that you would want to look at. Next, let me go back into the website real quickly. Okay. Now, besides the point and figure breakouts that you can take a look at, we also have something called the point and figure early alerts. And if you're not familiar with this, this is going to show you the stocks are going to break out either today or tomorrow if they hit a certain price. What we're going to do is we'll give you the closing price, and then we give you the breakout price. Originally, they're going to be listed by how close they are to the breakout price. What I like to do is click on the power tab over here, and that way you're going to find the strongest momentum stocks that we're in here. So in this case is Bit Auto Holdings, BITA. I checked that earlier. It actually doesn't have enough volume for me to trade it, so I backed off of that thing. But the next one we had XPO Logistics over here. It closed at 32.79. It's got a breakout price at 33. So that may be something that we would want to look at. Go in here. We actually upgraded to 28 back in the mid-March. But it's again, we have the potential to break out again. Look at the quick chart. Nice looking chart over there. If you look at the point and figure chart, we're right here. It looks like we can break out of a double top over there. So look at it today. It did break out. It hit. We're up 4.5% today. So once these things break, if you have a ticket ahead of time, where you say if you put it in like 33.10 in this case, a lot of times it'll hit that ticket and it'll bounce up 5-6% on the breakout. Okay, the next stock on here we have SkyWest. Today the airlines are one of the strongest groups out there. The transportation index is also outperforming. Go into the point and figure chart. Okay, you can see it's going to have some resistance up here at 22. However, actually 21. But today the breakout price was it hit 21.14 earlier and did have a little bit of a pop. I think it's pulled back with the broader market in that case. But again, if you'd have bought this thing right around this 21 area, it would have given you a quick pop on a trade if you're looking for that. Last one we're going to look at real quick is this Patrick Industries. Okay, Patrick Industries is still, according to this, we're still about $1 away from the breakout price. But it does have has a good looking chart over here on the quick chart. Over here, it did have a rocket shot, but it's been consolidating over here. So right about this point, I think it would probably be something you could go into. Take a look at the P&F chart. And again, we're breaking out the new highs with Patrick. And of course, stocks that make new highs will continue to make new highs. So that would be a list of stocks, again, that will break out today or tomorrow. It offers you the chance to get your tickets in there a little bit earlier. But one last thing on this thing. If the market rolls over here, as I still think it probably is going to, you can just do the opposite of these screens, and you can also find these use these same screens to find short ideas also to the downside. So I'm going to try to go back in here and see if we have any questions on this. I'm sorry this wasn't real smooth as far as the presentation. I should have gone over. I was kind of rushing for time this morning. Okay, the first question: does the stocks with buying points include all ETFs followed by market edge or just individual stocks? It includes all ETFs also. In fact, a lot of times what I will do is, this is chart, or you look at the, is this what you say right now? Okay. Now, a lot of times what I will do is I'll look at the point and figure early alerts to see if I can see, like maybe a couple weeks ago you had Reliance Steel, you had STLD, X. You had a lot of steel stocks that were in there getting ready to break out. And a lot of times, even with the ETFs, you might see a bunch of emerging markets. You might see like Peru, Colombia, Brazil. They're all showing up there. They're all coming up in the breakout areas. That's a pretty good sign that not only do you have this one stock or ETF coming in there, but you have a group or a whole sector that could be running into this area to break out. That's a very good sign that those are probably stocks that are going to break out and that you want to be in. Any more questions? Any individual stocks we might want to take a look at? We're kind of seeing the market roll over today. We started out, we were up, the Dow was up about 75, 80 points. It's now up 2. NASDAQ's down 37 points. Transports are having a good day with the railroads and the airlines leading the way. But every other index is a little bit lower. There's some more people typing here, so we'll get some questions. But again, this market is a funny thing. It's just there's nowhere else for people to go with their money, and that's kind of what's driving the prices a little bit higher. And you've had these big moves. The materials sector is up 29.5% off the lows from January and February. Year over year, it's still down 15%. You have the XLE, the energy sector, is up 31.5% from the lows. Year over year, it's still down 30%. So it has a ways to go. You've had crude oil up 55% from its lows. So that's what's driving these beaten up sectors to lead the market to new highs. One of our industries that we like, the XLI, the industrial group, it's up 20%, 20.7% from the highs year over year. It's kind of flat, but with this weak dollar, that's a place that looks good. All right, at what point would you determine a CTI as a false indicator this go around, exit the short ETFs we purchased? I actually have them. I'm actually going to stay with it a little bit longer. I think they're down about right around 8%, I believe, if you bought them in here. I want to see what's going to happen here. Now, if we would break out and take out these the first resistance pivot points that I showed you, we talked about earlier in this thing, I'll probably exit at that point. And what happens with the CTI is you actually go back later on. What it's telling you is we're probably in a weak area, part of the market, probably into the end of May. And if that's the case, we could go sideways. And the CTI was telling you, that it was a weak period, and we didn't do much from there. But again, I'm going to wait until we break out that first resistance area on either the S&P 500 or the Dow Jones. Once we break that, I think if we break that with any kind of force, you're probably going to get a run to the old highs. I'll be on the sidelines for that, and then I'll have to wait and see. I would wait and see when we, if the thing would pull back at that point before I would enter. You don't want to try to pick a top to enter to trade going the other way. Okay, and like I said, with the last two, if you went the if you did the CTI leveraged ETFs, you were up about 34% going into this call, and right now, so we're down about 8% from here. So. It may not be a winning call, but the track record is still pretty good. If somebody wanted to see what we thought about POT, potash. Oops, what happened? We're not sharing anymore. Stop sharing. Okay, can you see that now? Okay. All right, so here's potash. It hasn't participated yet on this pullback, that's for sure. I think you're going to have to see this thing probably. You'll probably get up around $17, $18. You are having some positive divergence over here where you made a higher low, and you took out this area over here. If you can break up here to a higher high, you may have something going. This is a positive that we didn't go back to the old lows. But I would probably sit here and watch this. The 50-day moving average is in here around 1709. In this case, I would probably wait to see if it would get above that. We're 1751 right now, so it did cross today. So you've got a little bit of problems right here. If it breaks in this area, 1750 to 18, you could get a trade out of that thing, maybe up to the $20, at least to this area of around $18 or so. You are having some pickup in the RSI 14 and also in this 30-day stochastic that I like. It's also showing so it's not oversold over here anymore. So not a great looking chart, but if you're trying to bottom feed, it might be something to kind of look at. Anybody else have any more questions? And sorry about the rough presentation there. Usually I like to have the slides, so I'm not talking and trying to move things around at the same time. But I don't see any more questions coming in, so this will be up on the website in about an hour or so. And I would recommend that if you go back and look at that, to write down those pivot points and also the resistance and support levels, because the pivot points will show you where traders actually change their opinion on the intermediate trend of the market. and they start to load up positions once it goes below the pivot point, they start to load up to the downside. As long as it stays above, they're going to try to buy dips. It's just something to know in your trading. So I will see you next week. Thanks for joining us, and hope you got something out of it.
Yeah, for some reason